How's it going, everyone? Welcome to the Proving Ground Mastermind. We're going to get started here in just about 2 minutes. As you guys get logged in, let me know if you can see my screen and if you can hear me talking. Another minute, we'll get started here, guys. When you guys get a chance, go ahead and chat in. Let me know if you can see my screen and if you can hear me talking. And let's go ahead and get started. All right, welcome to the Proving Ground Mastermind. As always, like, share, and follow us on social media, facebook.com/daytradesmart, instagram.com/daytradesmart, and the number 1, youtube.com/theprovingground. And if you have any questions thereafter, of course, you can email us at info@daytradesmart.com. All right, so we're going to go over Green Chart 2. Now, understand, guys, that they're serious about their deadline of June or July 1st for everyone to be on the new version of Green Chart, right? Green Chart 2, which, by the way, when all is said and done, it's going to be optimal in that it's going to have, you're going to have the ability to be able to trade on Green Chart 2. So there'll be a DOM where you can press buy and sell, and then it'll be easier to count pips. It'll be easier to set your stop loss and take profit. You can put in your parameters, put in how much risk you're gonna want to use, and then press the execute button, and it'll place the trade. In that currency pair, using money management for percentage, and then setting your stop loss and take profit. So that's going to be awesome. I'm not sure when that's going to be done. I was talking to the developers and everyone that's involved in making Green Chart 2, bringing it up to par. And they were asking where the order of priority should be, and I said, definitely the ability to trade on Green Chart 2. Now, there are some things that we had some concern about. One being the ability to, back test in a reasonable way. The other is that the indication lines up with the edge of the candle. So in doing so, I realized that there were some things that were awry, right? And so I'll give you guys an example here. So if we're looking at, let's go ahead and go to the mastermind chart here, and let's look at a side-by-side of let's just say Euro USD. And I am going to, let's see, how do I do that again? Hold on one second. Okay. There we go. All right. So here's Green Chart 1, and this is the Euro USD 60-minute. 1, 2, 3, 4, 5, 6, 7. Okay. Okay. So this is Green Chart 1, and let's look at it next to Green Chart 1 or Green Chart 2 on the left. Now, if I go back one candle on Green Chart 1, this is what the indication looks like, right? Now, if I go back, I'm going to minimize this so that I can just see the 1. That's the other issue, is that you can't really shrink it. Let's go to unnamed chart. Let's go to a 60-minute. Shrink it down. Okay. Now on the right, I have green chart 1. On the left, I have green chart 2. So this indication right here on green chart 1 is the end of that candle. Okay. Now, majors and minors are pointed down, which is what I want you to kind of pay attention to. Because if I go back on this chart, you can see that, yes, major and minor are pointed down, right? But it's not really aligned properly until I get to about right there, right? Let's look for a better example. Let's go. Let's see. So here's a good example. This is what it looks like here, and this is what it looks like when I'm just backed up, you know, to that candle. So right there, right? But that's not correct, right? We know they weren't pointed down like that. They're actually pointed up. Gray minor's down, black is up, green is up, red is up. Okay. Now if I take this and I go to the middle of that candle, then it's showing me the correct output. The middle of that candle right there. Okay. Now here's how I know I'm there. Because right here I've got a value of 64,142 or whatever, you know, on the live candle. If I go back, I see the value of where the previous candle ended right there, 68269. Now if I keep on going back to about right here, right there on that red candle, it's 7.6496, which is how this green candle ended. This red candle's value is actually 68269. Okay, and its indication is visible right about there. And there's the other issue, right? Because we have this kind of blocking us, which I don't like. Now, if I go back to the next candle, the previous candle, 76496 is the value on the green major. I can go, if I go there, then I'm looking at 72086, which is the value of the previous green candle, this one, right? So I got to line it up right about, come on, right about there, right? Because then I'm getting the current indication and I'm getting the correct values for that particular candle, right? So that would be this one right here, and you can see they match. And then if I go forward here, I can see green is up, red is up, gray is down, black is up. Now, once I've centered it, okay, if I click forward with my arrow key on my keyboard, then it stays right in the middle where I centered it, where I set it up. And so you can see right there, now it's correct. Now if I go back, I'm getting them all lined up with the middle of the candlestick now, right? See that? And then if I go forward, everything's fine, right? Everything is as it should be. So right there, right there, right there. Let's go back. See, pressure aligns, TNTs align, major minor align. Go back right here. Whoops. Go back right here. Right, everything looks like it aligns. The only other thing is you want to make sure that you've got it so that the majors and minors are in the correct position, right? So we can see that those are actually oversold. We're here, they're not oversold, right? So that's another big issue that we have to get them to work out for us. And let's see, is there a place where they become oversold? Nope. Right? No matter how we move it around, it's going to stay kind of on the channel. Now, I do want to preface by saying that we're going to get a more accurate readout with these indicators than we will with these indicators, just because of the data feed. So we're using all services on Green Chart 1, where Green Chart 2 we're using a direct feed to a provider, so it's not it's less delayed. So that's definitely a bonus. Okay. So once you've got it, where it needs to be, then it's just a matter of lining it up by just dragging the chart, right, left and right. So once I've got it lined up like that, right there, then when I go back, it stays lined up. Okay? You can see it's the middle of the candle right here. So the only other thing that I have quarrel with is when it reflects overbought or oversold. I don't care about the values. The values are easy. We'll be able to adjust to that. For example, the thick orange value ranges from 10 on top, 10.0 to 0.0 instead of 100, 0 on top to 100 on bottom. Okay, not a big deal. Same thing with green major value. That's working on versus being 0 to 75. It's working on a smaller scale, right? Whoops. I don't even know what I'm doing with most of that. So that's an issue right there. I want to know why we're able to adjust that, because that doesn't make any sense, right? Because then everything's overbought, oversold, right? So I need to know where the actual overbought, oversold are so that I know how to set these, right? So that's another issue. Another one is with the actual tools. So let me try going back to this chart. The other cool part is they load relatively fast, so that's nice. So once I've got it centered, right, and it's something I've got to do every time I open it, right? And I think so when I talked to them about it, they said that they're going to create a way to lock it, which is great, right about there. But I have to do them for each individual chart, right? So right there, now it's locked. So if I go back from here, they'll all be aligned correctly. The other thing is that if I see my setup, let's say, I don't know. Let's just look at this one. This is USD-CHF dirty pressure. Let me see if that one lines up with what we have here, USD-CHF. So that one was not below on Green Chart 1, right? Not until the next candle, then it kind of pivoted up. So let's look for so right here we know that's on bottom, that's clear right here. So let's look at that one. So let's go forward. Right there, that should be it right there. That's it. Okay. So right here, those are the same. Good. The values are not, right? This is showing negative 100. This is showing 2.4266, which again, this is going to be more accurate, by the way. But we can see that that's our dirty pressure setup, right? So if we wanted to see how far that went on the next candle, and we click over to the next candle, right? Or we want to mark it. Let's say we want to mark it from right there, right? We get our vertical line, and we don't have the ability to click and move it around, so we have to just click it. So if I click it right there, it doesn't look like I made the mark, right? But if I go forward, I can see that the mark is actually there. Okay. The other issue is with the measuring tool. So if I measure to see how far it went, right? So let me go forward one. If I measure from where the indication occurred to the end of this candle, it doesn't snap to that level, so I just have to kind of eyeball it, right? And then eyeball wherever the low might be, right? And then I can see the value right here. So wherever it might be, right? 23, 24 pips, whatever it might be. But it doesn't really snap to the level. So if I did it right there, then I can see it's like 22.9 pips, right? And maybe it is 22.9 pips, but I don't know for certain if it's right on there, right? Which is important when we're back testing. We're trying to figure out, okay, how many pips did it go? Especially if it's within micro pips of winning or losing. We want that exact number, right? And all this other stuff is just kind of gumming up the view, right? Like they grouped everything together right here at the edge. And that's like where we need that space to be able to look and see things, right? So that's another frustrating thing. You don't have the ability to just right click. Once you can only click the tools in, you can't manipulate them as well as you can with green charts. So small things like that, which make a big difference when you're trying to back test, but they're not make or break, right? And with a few tweaks, we can make it work. Obviously, those are things that I definitely expect that they'll fix. The other thing is that we don't have the date visible. So if I'm here, I don't know what date I'm looking at. I know that it's 10 o'clock or what have you, and that's only because down here I can see that, but I don't know what date it is. I don't know if I'm in 2018, 2020, 2021, right? I mean, obviously I know I'm in 2021 right now, but if I go back and I'm back testing, there's no quick reference as to where I am historically. So that's another thing. By the way, guys, for those of you guys that are reaching out to corporate and making your concerns known, it's working. It's having an effect, right? Last time we talked about this, we talked about the currency pairs. Guess what? Look at all the currency pairs we have, right? So that's a result of you guys being vocal about what changes you want to see, right? Because this is your tool, something you're going to be able to use. Obviously, we want to make sure that you're pleased with it. So continue to be vocal about it. Talk about the fact that we can't see at a glance up here somewhere the date and time that this candle is occurring historically or live, right? We can't see when we go back. We can't see the whatever that indication might be because some of these arrows and lines are blocking things, right? The measure tool and all the other tools, they don't have that snap effect where for the lines, it's wherever you click it is where it goes. It doesn't give you the free range to be able to move it around and then click it somewhere. The measuring tool, there's no snap to, so it doesn't snap to the tops or highs or lows or bottoms of candlesticks, so you just got to kind of guess it and eyeball it, which is an issue. Explain why it's an issue and how we use it, and that way it gets fixed, right? Believe me, I'm vocal about all of this stuff, but after I, go to bat a million times, 3-5 times a day, they just kind of tune me out because they don't hear anybody else mimicking. They don't hear anybody else talking about what I'm talking about, right? Because I say to people, I'll take care of it. Let me go ahead and take care of that. I'll talk to them, right? Well, if I'm always saying it for a group of people, then it always just looks like I'm saying it and not the group, right? Where if I say it and the group says it, then things start to get done, right? The squeaky wheel gets the grease. And there's other things in here that you probably don't like. You want to email about that as well, right? Until it gets fixed. Especially as this month, nears its end. Because if you're looking to just do it this way and no other way, then you want to make sure that you have the ability to use it the way that you're currently using it. The other thing is being able to go back to a date and not have to scroll back, right? So, the go-to date and time. Like, for example, here on Green Chart 1, it's simple for the most part because, let me reattach this window really quickly before I forget. All right. It's simple because, for one, we can just scroll back and get to like 2015 or wherever, 2016. Or we can use this go to date and time and then snap back to a specific time in history, right? Where here we don't have that ability. We can replay and go to a date and time, but if we're not replaying, we're just going back, that makes it cumbersome, right? Okay. So the other cool thing that they're working on, by the way, and some of you guys are going to be thrilled about this because you hate backtesting, is the ability to backtest just by the click of a button. You just put in the parameters that you're searching for, and you hit go, and it'll give you an output, right? Problem is that whoever's heading it up isn't doing it correctly, so that output is not going to be sequestered to a certain amount of candlesticks. It's not going to be like a 6 candle method. It's just going to, and it's going to be every single time that occurrence happened from, your start time to your end time. So if you said January 2016 to, December 31st, 2020, then it's going to give you every single time that setup occurred and what the best parameters are for it having occurred every single time, which is not going to be valid for you, right? Because you're not going to trade it every single time it happens. So you're not going to be able to limit it to just specific days. But I'm going to go to bat for that to make sure that those things happen. If they don't, that's when you'll have to be the squeaky wheel again. You'll have to, request, look, this is not valid. It needs to be validated by sequestering it to just, specific times, specific times a day, so on and so forth, right? So until it's a problem, we're not going to make it a problem. And obviously there's a lot of things that we want to make sure that we get done before it launches in July. Well, it's launched, but before, Green Chart 1 goes away and we only have Green Chart 2. And the more we use it, the more familiar we're going to get with what we like and don't like about it. Look, nobody likes change. None of us like change, all right? And so that's number one. I definitely don't, not especially not when you're changing something that I use, for my livelihood. But if it's going to be better, then let's stress test it. Let's work out all the kinks so that it's exactly what we want, right? And if it's going to be better, right, then let's do it. If they're willing to take our suggestions and put them into into this new format, then let's do that, right? Let's not miss our opportunity. Otherwise, we're just going to be, miserable with what the end result is. So, definitely, create an order of priority of things in your mind as to what things are most important for you, and then obviously request all of them, but, make sure that the things that are important for you, you're talking about often, right? And you're letting them know, look, I know that it's coming down to July. These things are not changed yet. Are these going to be changed before July? I really need X, Y, and Z done before July. And the more people say those things, the more people say the same things, the faster those things are going to happen. I mean, if you're asking for something like, I don't know, the candlesticks to be transparent, and just outlined with red and green instead of solid in the middle of the body of the candle, that you may be the only person, right? And it may not be something that they jump right to. But if it's something that's really important to everyone, it's something that's going to get done. So, let's all, start sending those emails. Don't let off the gas until you see the change occur, especially as the day nears, as we get closer to the end of this month. All right, good. So, of course, if you guys have any questions about any of that, feel free to email. And by all means, email me. You can blind copy me on your emails that you send to trade support with those suggestions, because if I see a lot of those, then I can go to them and say, look, we're getting a lot of requests for these things, which will just further validate to them that I'm not the only one that's saying it, but I know specifically what you guys are sending, and I can echo that to the developers. So my email is Hiram@daytradesmart.com, and that's HIRAM, not HYRUM, not HYRAM, HIRAM @daytradesmart.com. You can also just blind copy info@daytradesmart.com as well. So just copy me on those emails when you send them, so that I have that as well, so I can see, okay, what do these people need us to go to bat for, so that we're all saying the same thing, okay? And do it, because if not, you're going to be stuck with what you get, right? All right. So today we're going to, and if you guys have any other input on that, feel free to chat that in as well. So today we are going to cover some setups that early on we looked at pretty often, which is the whiplash and the four-way. Now, with the new system, we should be able to code these so that we get notifications for them. So that'll be a great advantage. And by the way that alerts are done and stuff like that are going to be a lot more user-friendly. So you can have whatever you want be sent as an alert, and only those things on Green Chart 2 once they're done with that. And you'll have the ability to set that up, even if it's something that you've come up with and you just want to see an alert for it. So really cool stuff. Definitely some stuff to look forward to. Okay. So the whiplash, so let's talk about the whiplash first. The whiplash is within the major and minor. And all we want to see within the whiplash is that the lines, the major and minor, go from oversold, right, like this, to overbought, and they kind of overlay each other, right? They're not separated. They're on top of each other, right? So you see right there, still on top of each other, and then they move their way from oversold to overbought, and then minors fatigue, right? Minors kind of hit that hiccup or even a small cross down, right? And majors persist. Majors are still pointed up. So what we regularly see in situations like this, and this is really specific, and because it's specific, it doesn't happen very often. But what we want to see, what we expect to see, is some type of continuation, right? So up movement, and then after that, down movement, right? So one candle, we look for up movement, which there's very little here. So again, it's going to be contingent on, what time of day you're trading, because you could perhaps get, a 2 or 3 pip trade where somebody else can get, a 5 to 10 or more pip trade, depending on the currency pair you're trading, time of day you're trading, so on and so forth, right? So we expect up movement, and then after up movement, we expect down movement. Okay, so the first trade on the whiplash, right, is going to be up, and this one, in this instance, only moved about 3.8 pips. And then on the next candle, down. And that one, I think, only moved about 3.5 or something. Yeah, 3.5. A little bit of draw right there, 1.6 pips, not much, and then 3.5 movement. Excuse me. Now, this is one that for both candles, for the first trade, you probably don't want to go more than 2 candles out. So if you're back testing, you want to see what happens in the first 2 candles. And then for the second trade, the same thing, the next 2 candles. So 4 candles total at most. 4 candles at most. After that, it's just luck. So 2 for the up and 2 for the down. And you want to see, okay, what could I have gotten? So not using a 6 candle method, not using anything else. I would say just the first 2 candles for the up movement, and then the first 2 candles for the down movement, right there. So for that first trade, that would be the highest, and that would be the drawdown. For that second trade, that would be the lowest, and that would be the drawdown. 1.6 pips and 6.7 movement. Okay. So here's another one. This one's, oh, by the way, we want for these occurrences to happen oversold or overbought, right? So this one's oversold. And again, if we go back, we can see that from overbought, they kind of laid over each other, right? And stayed that way, kind of laid over each other. And then minors fatigued, gray up, black down, majors persisted. And we see that majors are all the way through minors. They've completely overcrossed them, right? So it creates that 4-way, right? You got 2 going this way and then 2 going this way. Okay? So right here, again, we would be looking for, the whiplash, Whiplash, because in this instance we expect down and then followed by up, right? So it goes one direction and then back the other direction. Okay. So here we expect down movement first. And there's some down movement. That one only moved about 4 pips. Again, it's just going to be relative to the time that you trade. You can see this is towards the end of the day. And then after that, up movement. So that one probably moved about 5. Yeah, 4.4. Okay, so again, it's nice when it happens in the first 2 candles, down then up. But we can't expect that we get down and then maybe some extra down right here and then up. Nonetheless, once we get our down on this candle, we're expecting the up. Okay? But right here, our down is going to be, back tested for at least 2 candles. Because even if we entered, so if we entered right here, right, and then we entered right here for a buy, and this one for a sell, right? So this is our sell right here at the end of that candle, and then at the end of this candle is our buy. Even if we're in a buy right here, we could still finish a sell and go up and get a buy, right? So we could potentially be in 2 trades at the same time if our sell trade has not filled, right? And depending on the stop loss and take profit, if I'm entering a trade here and I'm only like 2 pips away from my take profit from my original sell, and I'm in a buy for say 3 pips or 5 pips, but my stop loss is 5 pips, well, I can still get 2 more pips down, take profit on my sell, and then go back up and take profit on my buy, right? So don't let that be a concern. If you're looking at it that way, both of those can still be profitable even if they're going in both directions. Okay. So 3, 4, there's 4 candles right there. We can see that that sell, that's the lowest point. The drawdown is only about 2 micropips. And then the buy, about 1 micropip, and the high is about 8.5. So you see we're only using 1, 2, 3, 4 candles. After that, we're done. Right? We're not going to use beyond that. Okay. So let's look at this example here. Again, we can see that we came from oversold right here to overbought, and they're laid over each other, right? See how they're laid over each other. And then miners fatigue, right? Gray down, black up, no cross or touching. I mean, if they are crossed slightly, it's okay. And then green up and red up, and completely through, right? So they've completely crossed beyond gray and black, right? So right here, again, we expect a long trade or some long movement. That would be our first, and then short movement. So looks like we only got about 3.6 on that one, and it went short. Now we wouldn't have shorted here until there, right? And then we would short. And that one moved about 9.4. Right? So let's look at the 4 candles. So right here, the highest point would be like 9.5, right? And the lowest point would be 11.8. And that would be, actually for the buy, it would be 12.2 and 11.8. And then for the sell, so this would be a buy. That's right. Okay. So our drawdown 11.8. And then for the sell, it would be, our drawdown would be 4.7 and 9.4, right? Because we didn't go, this is the lowest point we went before we went to these highs. So obviously we're not going to look at those highs as our drawdown because they wouldn't have happened. The lowest point was here. So that's how we would collect that, right? What's the lowest point? And then before the lowest point, how much did we go upside down? And that's how we collect that information, right? And it's just those 4 candles. Okay. Now, so that's the whiplash. And the whiplash is, of course, directional first. So in this case, up first, then down. And then the 4-way, which is what we'll be looking at here, we can see that as they move their way up the channel from oversold to overbought or vice versa, they're separated, right? So minors have already moved up, right? Majors are hanging back, but they still kind of follow them through to the overbought. And when they get there, we can see that minors are still there, and they're this time they're a little soft crossed. But see that separation as they move their way up, and then majors persisted, right? And a 4-way, unlike a whiplash, is just a reversal. Again, I would say 3 to 4 candles on this one would be max that you'd be looking to test. Okay, so right here, then we would expect a sell or a short trade, and that one was just fine. That moved 41.3. Is probably something that happened there, right? Because we can see, look at 1, 2, 3, 4, and then one big candle, right? And this is, by the way, this is what we're talking about when we say that sometimes it's almost like majors are just on autopilot, right? And then all of a sudden it hits some certain level, and then boom, it just jacks the other direction, right? Now, what are we looking at when we see these indications, one versus the other, right? So here we can kind of see, again, majors kind of lazily following minors. I mean, this is like a head fake right here, right? We got all the elements, right? Minors in the channel, having crossed in the previous. Majors crossed but hung back, green on bottom, green candle, right? Now, in this instance, it kind of follows its way up, right? It still moves up. 1, 2, 3 candles, right? For a total of 26.3 pips, 26.6 pips, right? So if anything, kind of a failed head fake, unless, I mean, you've got some huge parameters for that, which I doubt on the Euro USD, but it just wouldn't have worked out for a head fake, right? Now, the miners kind of led the pack, right? I know some of you are like, well, no, if the majors are not going to do it, then it's not going to happen, right? But miners, started heading up. Look at this. They're already overbought. And majors are barely entering the channel, right? But they just kind of follow through with them and move up. And then move up some more, right? And then they pull back. Right? So it's like they hit a certain level or something. So that's what we're using the overbought for in this instance, right? We're trying to find where's that threshold, where's that max out for the majors, where they're going to say, okay, that's enough. Miners have committed enough to the buy, so now it's our opportunity to sell, right? Or committed to the sell, now it's our opportunity to buy, whatever it might be, right? With a four-way or whiplash, we see kind of the opposite, right? We see that majors are overbought, miners are fatigued, but a lot of times majors will use that to continue. And we can see they were kind of in agreement. They kind of work together to work their way up. And a lot of times when they agree that much, you'll kind of see a fight between them, like the majors are trying to shake off the miners, right? Like right here, we can see that we had down and up, right? Small candle, okay? And then, so they still agree, and then you get another candle. Now you're overbought. And then here's where we still expect to see some follow through, followed by a reversal, right? Because we're already overbought. Both of them are overbought now, right? Miners have kind of gassed out. Majors are now overbought. Miners gassed out. So we expect that follow through. There's a follow through followed by reversal, right? Or at least retracement. Maybe not full reversal, but retracement, right? Okay. So that's the whiplash. The four-way, again, it's like majors are just kind of lazily following the miners, right? So you can see it kind of set up like this one on that last one, right? Miners entered the channel, crossed on the previous candle. Majors are soft crossed. Green pressures on bottom, green candle. So that's a head fake, right? And you can see that gets a more, this example got a more desired result. But in the other example, the majors kind of followed the miners up, right? Okay, so let's go to our next. Here we go. So we can see right here again, we've got majors, and this is actually a hiccup pattern right here, right? Miners are already kind of in the channel. Majors are hiccuped. Green's on top, red candle. But watch how they just kind of follow them down lazily, right? Miners are winning this fight. And right there, they intersect, right? So miners are kind of sideways. Majors intersect with them. And this creates a four-way because they're separated. They're not overlapping as they move down the channel. Miners kind of made the move first, the majors kind of lazily followed, right? And then miners kind of gassed out, majors persisted, and that gave us the four-way. So right here, then we'd expect a long trade. So there's no follow-up to this one. Whiplash is two-part, four-way is just one part, and it's reversal for retracement or full reversal, right? And right here, it goes about 3.5 against and then up 27 pips. So again, something else could have happened there, and this is like 1 a.m. European market open. So, likely there was something that happened there that caused for there to be, such a large move. But nonetheless, it serves the purpose of what we're illustrating here, which is, again, majors did kind of follow minors lazily down the channel, right, from overbought to oversold. It looks like minors are kind of leading the pack here, right, and majors is just following along. Let me erase that. So we can see it kind of followed along, and then they're oversold, and now they're ready to make their move, and they make their move back up the channel, causing for there to be a green candle. Okay, so let's look at this last example right here. So let's go back, and again we can see major minor overbought. Minors are still making that move short. Majors have not conceded yet. Right here they start to concede and go short with minors. Minors, again, look at that, almost oversold already. And now almost all the way oversold. Majors now in the channel. There's continuation there. And we did get some pullback initially right there, right? Quite a bit, actually, 29.6. But ultimately it went, created a red candle, and then we got that intersection, right, where we've got majors persisting, minors kind of hiccuping. And then right there, that's the four-way, right, because we've got our separation right here between major and minor as they move down the channel, whereas the whiplash, they moved, in this example, they moved up together, right, overlapped, and then we get that continuation up and then reversal. Where here we're just expecting reversal for retracement or for full reversal, right? Down moves down a little bit. Let's see. 17.6, that's quite a bit. 8.6 up. So it just depends on what your take profit is, right? So let's see what that played out, how that played out on a 5-minute chart. Let's go back here. So if that was our entry right there, and we know it went at least 8.6 on that first candle. So did it go down significantly or up significantly first, right? Right there it went 7.4 right off the bat, right? We're here, total it went 17.6. That first 5 minutes only went about 7.4 and then 2.1 up. 10 minutes in, it went 6.2. 15 minutes in, it went 8.4. So it actually hit that high before it hit the low on that first candle, right? Let's look at the other candles. And then it just continues, right? So it hit that low again, 1, 2, 3, 4 candles, right? And really the move happened right here. It happened a little bit there, then it came back, then it went up, right? So it just depends on what time of day you're trading. But even if you were trading for like a 5 pip stop loss, 5 pip take profit, or 10 pip stop loss, 5 pip take profit, whatever, that would have been fine, right? Because it went 7.4, but then it went up 8.6 and then went back down. And then after all of that, it started to move back up for a total of, 20 pips after these 4 candles, right? And the drawdown on that would be 17.6. Draw that line back here again. Right there. Okay, so it's one of those small nuances of the major minor that you can see in both illustrations. They look very similar, but it's those small nuances, right? Are they together? Are they separated? How did it start? Did the minors kind of lead the pack in that regard? Did the majors? And so sometimes it catches us, right? Because we're looking at this, for example, and we can see, okay, market's moving steadily down, right? And for those of you guys that use support and resistance, maybe you're paying attention to some of these lines down here, right? Where you can see, okay, there's a level of support. Actually, it's more like there, right? And we can see that that's validated right there, bounce, right there, bounce. And so we could potentially see it there, right? Boom, and then start looking for some long, right? Because that's how support and resistance works. I mean, works is a relative term, but we can get caught in some of that because we see such dramatic movement, down, or short, and in this instance, I mean, it got close enough where, that could have really helped you out, but there are other instances where, you're not going to get that chance, right? Like here, let's look at this example. So we can see our level down here. We can even see a level right here, right? Where we kind of came down, hit, came up, came down. We hit right there, dropped below, came back up, and then came below, made another level, right? Sure, if we go back, we can find more validation for that, but, I'm not going to go and do that right now, right? Even if we, adjusted this a little bit and said, okay, right here is kind of a level as well, right? Even though it's more, we can see, yeah, right there was a rejection. We can see as it came up, it rejected price and came down to this level, right? But here it came down and then rejected all the way up to here, right? Okay. So, that being the case, even if both of those were our levels or this one or, whatever, right? We can see that we just kind of pivoted right there and started going the other direction, right? On that one, we came back, but right here, we just kind of shot the other direction, right, for 27 pips. That's significant. It did go down about 3.5, but then went up 27, right? So even, again, just like everything else that we show you, even if it's just a good way to watch out so you don't find yourself in a bad situation, right, to know some of these nuances could keep you out of trouble. Even if it's like, okay, I'm just going to hold off for a second. Maybe it's creating a wave, right? Wave down, up, and then down, up, down, right? So maybe it's creating that wave, and if we jump in now, we could sustain a lot of drawdown and be in a bad spot, right? Because sometimes we become very nearsighted, where we only see these couple candles, and sometimes that creates a bias for us. We say, oh, the market's moving down, right? Or in situations like this, oh, the market's moving up, right? And we think, oh, it's going to likely continue up. Or, here it's kind of down and sideways. Here it's up, right? It's been moving up. Especially if we're looking at a smaller time frame, because a smaller time frame is going to show more dramatic up, right? Some pulls back, but for the most part, some dramatic up movement. And if we allow that to cloud our judgment or looking at our indicators correctly, a lot of times we can find ourselves in serious heat, right? So, something to be aware of when you're trading, either, waiting to fill your trade or about to get into a trade. Just a few things to kind of be cognizant of is some of those nuances, the major minor. A lot of times it can help you to get positioning on a trade or not get into a trade that would otherwise have, drawn down and more than you had anticipated, and caused losers where there otherwise wouldn't have been any losers, right? So some cool things to look out for there. or also just taking that particular setup, back testing just those particular parameters. Now again, be very specific as to what your parameters are, right? If it's, I want for these lines to always be overlapping until they get overbought or oversold, or I want them to never be touching. And by the way, looking at it from this view, from where it occurred right here, doesn't really tell the story of how it got there and in what fashion it got there. When you back up, those lines can start to merge. Sometimes we've even seen where, and you'll see this if you backtest this, where from here, from this candle right here, this is what it looks like, that they're separated, right? But then when you go back, they're actually not separated, and it's actually a whiplash. Let's see if we can find an example of that really quickly. I want to show you what I mean. And this is not what I'm talking about, but look at how close those are, right? From this candle, looking at it from that candle, as compared to here, looking at it from this candle. They look much more separated from this view, which is why you have to click back. You have to go back and see that sequence, right? Or like, sometimes it'll look like from here they were oversold. I mean, look at how deep that looks oversold, at least for the majors. But then if I go back to that time, it's actually really shallow from that candlestick and from its candlestick, right? From the candlestick where it was oversold. Notice where it is in that range, right? The visual range, it's right there towards closer to that oversold threshold, right? Where from here, right there, look at how far down it looks like it dropped. It didn't, right? Because we can see that major oversold actually, you can see it stayed above that 25, that major oversold level right there. And even from this view, it's still above it. And miners, of course, stayed relatively close to where they were because it's on their scale that we're looking at this. But these kind of looked like they dropped lower, which they didn't value-wise. It's more just scaling. But you can see how it looks different depending on where you are, in the sequence. So make sure that you're actually going back and seeing where they overlapped or where they separated, right? So that you make sure that you've got the correct indication when you reach it. All right, guys, that's all I've got for you today. Remember, reach out to Trader Support, copy me on those emails, let them know some of the things you want to see on the green chart too, because that's going forward, guys. There's nothing that's going to stop it. It's going to go forward. So let's make it what we want it to be, so that we can use it the way we want to use it. All right, appreciate you guys joining us. Look forward to speaking with you guys again on Friday if you're joining us for the sweep, or we'll see you next week on Tuesday. Have a good one and happy trading.